What would behoove you of not being able to get those loan limits? Well, you might have had defaulted on some kind of VA loan. You can see that right through here. So let's break these down. If you're fully entitled, there's no VA imposed loan limits. That's fantastic news for everybody out there, especially if you're looking to buy a multi-unit or you're in an area where home prices are really high and you might have to look into a jumbo program. Texas, California, and Florida, fantastic program for all you guys down there. You can borrow any loan amount without paying a down payment. So that's also a huge benefit for those out there, as long as the lender approves you based on the income, credit, and your debt ratio. So we'd have to get you approved, but there's a lot of benefits out here for you, folks. The next thing is high cost areas. What high cost areas out there? Well, you really don't need to figure that part out, because if you have your full entitlements, you don't have to worry about loan limits. Now, if you don't have those full entitlements, it's basically because you defaulted on a VA loan or some kind of government loan, so you might be limited on to how much you can purchase. If you do have some dings against your credit or your entitlements, you might be stuck at $806,000 as your loan amount in many areas. But if you're in a high cost area like Hawaii, California, and some areas like that, you can actually go up to $1.2 million and still be in the VA loan limits. That's if you don't have your entitlements intact. If you do, you're in full entitlements, so there is no loan limits. Then I asked it, what kind of properties can you buy? Did you realize if you're looking to buy, maybe a 2-unit, 3-unit, or 4-unit building, you could get away with a VA loan, no money down, buying a 4-unit property, and just think, 3 rents. Could those actually make your whole mortgage payment for you? It'd be enticing to look into those numbers. So here's what we're looking at right through here. It's going to give you a layout, the kind of property you're looking at, how many units it is, how much money you would need down, and do you need to live there? So that's what we're going to talk about here next. So you could buy a single family home all the way up to a 4-unit property right through here. No money down, but you're going to have to live there. So that's one of the caveats there. With a VA loan, you have to be living in the property that you're financing. You can't do this on a rental property. That's why a lot of people are choosing this. They're going with a duplex, 3-unit, or 4-unit to get in that revenue from those rentals to help offset those hefty mortgage payments that you're seeing today. So that's what we're looking at right through there. Here's another benefit for you. Let's compare. Let's even say you have great credit. Well, let's compare what your payment would be with a conventional loan, because if you don't put down 20%, you need what's called PMI. So with a conventional loan, you need to put down 20%, but if you put down none, well, you'd have to pay PMI, but the minimum down payment you're required for on a conventional loan, if you're a first-time home buyer, is 3%. So let's go and dissect some of the numbers, what they're going to look like if you would compare a conventional loan with a VA loan. So let's break it down. So if you go to therateupdate.com, you can click the mortgage calculator tools and you're going to come up with this, the mortgage calculator. So let's just throw in some numbers.